It's Midcap Radar time, and a slew of midcap earnings have started trickling in as we count down to the final 120 minutes of today's trading session. I am Hormas Patakia. With me, as always, is Vivek Iyer. We have numbers flashing on your screen, and there is a whole list of numbers that we have to track. But the broader markets are the story of the day. A sharp recovery from the lows of the session.
Sharp recovery from the lows of the session. Midcap index still marginally in the red, but it belies the fact that there's been almost a 2% intraday recovery from the lows of the day. We have quite a lot lined up on the show. Let's start off with the top headlines. Market recovers to trade near the day's high. Midcaps recoup losses with the index now in the green. Financials and realty stocks gain while IT and FMCG lag.
Federal Bank falls over 4% after the bank reported its lowest NIMs in the last 18 quarters. The management tells CNBC-TV18 that provisions were taken at levels higher than required.
Chola Investment Finance gains after CLSA upgrades the stock to outperform from hold and sets a target of 1,450 rupees a share. The brokerage says they see high teen assets under management CAGR despite lower vehicle finance growth.
Keynes Tech plunges in today's session after revenue and profit after tax came in below expectations, and the company has also cut its FY25 revenue guidance to 2,800 crores from 3,000 crore rupees earlier. The management tells CNBC-TV18 that execution delays in the quarter revenue led to the revenue guidance cut.
Balkrishna Industry gains over 5.5% after Nomura's positive note. The brokerage upgrades the stock to buy with a target of 3,342 rupees a share. Says the company is poised to benefit from demand recovery. Welcome. Midcap Radar is what we're looking at. Look at some of the stock, especially from the auto as well as the auto ancillary space. Some time ago, you saw the numbers of TVS Motors flash on your screen, and TVS Motors is now up over 5%. Balkrishna Industry, a stock that we just alluded to, a Nomura upgrade, that stock too is doing very well in the session. The other set of stocks that are doing very well is the Realty pack, but a whole host of stocks is what Vamakshi has on her radar. She's standing by the wall. This is our special segment, Midcap Movers. Vamakshi will take us through the midcaps that are moving around in the session.
Well, good afternoon, Vivek. Yes, it's been quite a volatile session for the midcap index, but still reeling under pressure. In fact, it has almost, come into the green territory as of now. But let me first take you through the list of stocks that were losing out in trade today. Anantraj is locked in the 20% lower circuit today. In fact, the stock has lost over 40% since Jan 21. NetWeb has also continuously declined over the last couple of trading sessions. Today as well, the stock is locked in a lower circuit, and in fact since Jan 2 the stock has nearly halved. Reddington, on the other hand, is down nearly 9%. 361 WAM reported a good set of numbers, but there are reports as suggesting that there are some IT raids going on. So therefore, the stock is down and out nearly 6% in trade today. But apart from that, lots of earnings reaction as well. We're seeing a very sharp fall in Prudent, down nearly 15%. Keynes Tech is down nearly 12% after the guidance cut. Aditya Birla Sun Life EMC2 down nearly 3%. And look at the cut on Apar Industries. The stock recently reported its numbers just a short while ago, and the stock is taking a very big hit, down nearly 19%. Apart from that, we have stocks from the capital goods space that are under pressure as of now. Hitachi Energy is down nearly 9%. CG Power is slated to report its numbers later today. That stock is seeing a sharp fall of almost 6%. Jyoti CNC as well as Triveni Turbine both are down nearly 6 to 7%. Apart from that, on the flip side, let's look at stocks that are gaining in trade today. Garden Reach Shipbuilders is up nearly 5%. Balkrishna Industries is up 7%. M&M Financial and Bank of India also seeing gains of over 5%.
Vamakshi, thanks a lot for that. And that's been the story of the afternoon, right? The recovery in the broader markets. Vamakshi highlighted CG Power at one point was down almost 10-11% ahead of its results and has recovered from the lows of the day. Is now trading 6% lower ahead of its results. But the midcap index has slipped into the green, actually has moved into the green, if I could say that. Almost a 700-point recovery from the lows of the day. The small cap index still under pressure, but that too is significantly off the lows of the day. Let's welcome in Shrikant Chauhan from Kotak Securities, who's joining in for a quick chart check. Shrikant, good afternoon. Thank you for joining in. The bigger question now compared to the index, the index is doing fairly well for itself. The Nifty is comfortable about the 23,000 mark. What about the broader markets, the sell-off that you have seen in the mid-caps and the small caps? Is there more pain that is in store for both the indices still? Do you use this recovery in the mid-cap index to reduce your positions in some of these names?
Good afternoon after Amos, and good afternoon, everyone. I think, see, like if we see the trend of the market, then uh, uh, specifically mid-cap Nifty, mid-cap 50 index, then it was very close to its extreme levels, and from there we saw like a little bounce back from the lower levels. But while looking at the entire structure of the market, yes, I'm of the view that it's a bounce back that we are seeing, and we need a lot uh, I'm going to say the Nifty has to cross the level of 23,500 to show the real strength. Otherwise, whichever the up move that we are seeing right now, it's a bounce back, it's a pullback to the recent sell-off, deep sell-off that we saw. And ideal strategy should be to look for reducing mid-cap positions. Yes, we should look for adding some banks or NBFCs to the portfolio because those stocks were like very close to their extreme levels and completely oversold. So there we can see some more up move. But yes, in this current up move, if we see any specific pullback in mid-cap stocks, we should look for reducing those stocks.
Understood that. So Shrikant, at the current juncture, what are the stocks that you're liking? What are the stocks you feel can see further selling pressure?
See, like a few mid-cap stocks, they are like doing really well. Those who are like very close to their support levels and who have not like participated heavily in the previous up move, or those corrected to their important support levels, I think they can do well. In that space, we like Amber Enterprises, which is currently around some 6690, 6700 levels. If we see the overall trend of the stock, then whenever there was rally in the stock, we saw equal amount of correction, and then again the stock has resumed the rally. This time also, after correcting to the levels of 6100, I'm expecting the stock to move towards the levels of 7500 or maybe 7700 in next few weeks. So at current levels, it is like quite attractive to buy. If there is any trading positions, then one can keep stop loss around 6300. But if there is a medium-term view, then certainly we should look for adding Amber at current levels. We also like DCB, a Development Credit Bank, which is around 117, 118. For DCB also, I am expecting stock to move towards the levels of maybe 145, 150 in next few weeks. And at current level, the risk-reward ratio is quite favorable even for traders. So it's a buy at current levels with a medium-term view, and for traders, one can keep stop loss around 110.
All right, Shrikant, thank you so much for sparing time and joining us today to take your views on the markets and on specific stocks as well. By the way, TVS Motors has now surged to the highest point of the day after its results, now 5.5% higher on the stock. Numbers came in just a few minutes earlier. The profits were up only 4%, but revenue increased by 10% from last year. EBITDA was up 17%. Margins were the bigger takeaway, a 70 basis point expansion from last year and also 30 basis points higher than what the CNBC-TV18 poll was anticipating. So 11.9% margins for TVS Motors. The stock at the highest point of the day, now 5.5% higher on the stock. Take a short break, but before we do that, it's time for Growth Code, which is an initiative by Grow and CNBC-TV18 designed to provide you with valuable trading strategies. This week, SEBI's whole-time member Anant Narayan shared his insights on the newly introduced F&O trading guidelines and the rationale behind the same. Listen in.
Overtrading, particularly on expiry day index options, was creating the possibility of more systemic risk with an increase in the overall market risk right up to the time of the expiry. So these two areas, one is a systemic risk area, the other of related to investor protection, is something that we were looking at closely, and we were consulting with market participants for months together. Our consultations told us that the issue really boiled down not to the broad swathe of derivatives, but specifically to the issue of index options trading on expiry day. So it was a very clinical approach that we subsequently adopted, essentially to address this specific issue of overtrading in index options on expiry day. On October 1st, 2024, we announced a series of 6 steps to address this. 5 out of those were directly aimed exactly at this, curbing overtrading in index options on expiry day. Now, the impact of those steps are still playing out. We will watch the data very closely to see how things stabilize. As and when we come to a conclusion on what the impact of these 6 steps have been, if further steps are necessary, both for market development as well as for investor protection, we will take steps accordingly. So at this point of time, nothing is planned. We will see what the data shows, and then we will take the steps further. But there should be no doubt about SEBI's broad objectives here. We want a sustained F&O market that is conducive to capital formation in the country. At the same time, we want to ensure investor protection and we want to ensure systemic stability. And we will continue to work along these lines in consultation with all market participants.
Welcome back to Midcap Radar. Well, this is our special segment, Midcap Spotlight. Vamakshi today puts the focus on Aditya Birla AMC.
Well, Vivek, the company reported the Q3 numbers, and when we look at the revenue, that saw an uptick by 5% sequentially, and this in turn reflects the improvement in revenue yield by 2.1 basis points quarter on quarter. Overall, the revenue came in nearly 5% higher as compared to some analyst expectations. When we look at the cost-to-income ratio, that has seen a reduction of 236 basis points to 37.9%, and this is mainly on account of a fall in employee expenses as well as a decline in the other expenses, and resultantly, the operating profit has seen a strong growth of 9% quarter on quarter. On the other hand, the other income has seen a dip of almost 60% sequentially, and therefore the net profit has seen a decline of almost 8%, but nevertheless it has still come in above what the analysts were expecting. But when you look at the operational metrics for the company, they were rather weak. The MF quarterly average AUM was rather flat quarter on quarter at 3.83 lakh crores. When you look at the equity AUM, that too saw a dip of almost 1% quarter on quarter. SIP flows were down nearly 3% sequentially, and when we look at the new SIP registration, that has fallen from 1,155 to 670, which is a drop of almost 42%. So overall, while the results, that is the P&L, looks quite good, the operational metrics are not quite impressive, and resultantly the stock is declining in trade.
All right, Vamakshi, thank you so much for Aditya Birla AMC. Another earnings reaction, by the way, can't take your eyes off TVS Motors, still up now 6% ahead of after reporting its results. A strong performance on the operating front. We'll get Sudarshan on TVS Motors in just a bit, but take a look at the stock reaction that TVS Motors has seen, 6% higher on the stock. By the way, also pull up RITES, that also reported results just a few minutes ago, and they were lower on a year-on-year basis across all parameters. But let's cut across to Shireen Bhan, who is in an exclusive conversation with Hardik Puri.
What we are likely to see startups do, particularly here in India, on that front. As someone who's run India's longest running show on startups and entrepreneurship, a show called Young Turks, which turns 23 in June, I think we know a thing or two about the potential and the promise of India's startup ecosystem. And to the question that was being asked on what will it take to ensure that we actually see the Indian startup ecosystem flourish, I think 2024 in many ways has been a breakout year, because we've seen the kind of exit possibilities, the kind of listings that we've seen in the Indian stock markets for new age companies, the startup companies, so to speak, that really has given us a flavor of the kind of potential that is possible. There is, of course, another big event coming up as we chart out the roadmap for Energizing India, which starts today, but we're also now heading into the India Energy Week, which promises to bring together global companies here in India. And I believe that this is going to be the largest event that we are hosting here in India as part of the India Energy Week. Mr. Puri, I'll get you to give us more details on that in just a second, but also the opportunities that presents. So without further ado, sir, before we talk about innovation and entrepreneurship, may I ask you to lay out the roadmap for us as far as the energy market is concerned in 2025, especially as we navigate a Trump era?
Thank you very much. As in the past, it's both a privilege and something enjoyable to talk to you about the global energy landscape. I'm a little taken aback by your question about, or rather your wanting me to lay out. With all the humility at my disposal, let me tell you, I'm one of those who can only make a little contribution in navigating the unfolding scenario. The laying out of the global scenario, I think, is now, and I hope I'm not misunderstood, beyond the contribution of any one individual. The honest God's truth is that between technology, innovation, entrepreneurship, and all that, which we are going to be discussing in a moment, the fact of the matter is that 2024 has demonstrated, it has confirmed what we have been saying, some of us have been saying for some time, that there is more energy coming onto the market than can be consumed in the foreseeable future. Now, I'm choosing my words very carefully. The fact that more energy is coming onto the markets is an empirically verifiable fact. I mean, you have more production taking place in hitherto non-producing places. Some of those names were not there. Now you have expressions in the English language, finding another Guyana. I keep using it. I keep saying you're going to find not one, many Guyanas in the Andaman Sea. Existing producers are producing more. Yeah. That's one side of the equation. You see Brazil, 3 million barrels a day, getting another 1.5 lakh barrels additional. Canada, Guyana, Suriname, and the United States, which is one of the largest, perhaps the largest producer, 13 million barrels of oil they produce, they're going to put another 1.5 million. And that's the common thing. We don't know what else will happen when, shale and other things. But then along with that is another set of countries which actually has been trying to cut back production, and they have succeeded by 5 million barrels a day from 102 to 97 or so. But not all of them are complying with it. The fact of the matter is there's more oil coming on the market from some of those sources than they would want. Now, their decision to cut back is essentially on account of their desire to maintain the price level. They think for balancing their budgets, they need something like $80 a barrel. Today, the price seems to be heading more towards 70, 72 rather than 80. That's the crude oil price. If you look at gas, on that you're on surer ground that the investments which were made into natural gas over the last 10 years are today bringing more stuff on. If you look at investment in pipelines, you look at more long-term prospects. If not in 2025, not in 2026. I know some of my friends, the OMC chiefs, are not always agreeing with me because they look at it in terms of their, books in the immediate future. And that's a healthy situation, that you have a minister who's looking at long-term and the OMCs are looking at their quarterly profits. Shireen, I can tell you that story about anyone being able to influence negatively the price going up. What is welcome is a newly elected president of the United States. And this is my personal view. It's for the citizens of a country to decide whom they elect. But here is a gentleman who says, bring the international price of oil down. Here is a person who says, he's calling on everyone to bring the price down. He's also saying that's the best way of doing X, Y, Z, controlling inflation, bringing interest rates down. He's appealing to all these state actors and non-state actors. Let's stop these senseless wars. That is positive news. I'm not a soothsayer. I don't know how far that is going to go. But you've seen the results of that, certainly in the Middle East. There is a peace deal. There is an exchange of hostages underway. I am reasonably confident that a conflict which started in February 2022 cannot go on even by itself. But the President of the United States has appealed. I mean, I can repeat to you the tone of the appeal. I love the Russian people. President Putin is my friend. I call on him to end this senseless war. And that is combined simultaneously with disincentives to all parties, that I will stop aiding you if you go on fighting kind of thing. And there is a part of that is the leveraging which is taking place on oil. I mean, the outgoing administration put in place some additional sanctions on 2 entities as far as I remember, and some shipping fleet. But even if you look at the language of the incoming energy secretary, it is couched in terms of wanting to use this as leverage to resolve a problem. The direction is very clear. The direction is international prices at the bunk should come down.
Yeah.
People should benefit. Economies should benefit. We should get on to other forms of economic activity. I don't want to comment on the rest, but on the energy front, to me, this is a plus-plus.
Let's understand this plus, as you called it, sir, from an Indian context. And I'll ask you this on the back of the conversation that I had with Fatih Birol at the IEA. And he said for 2025, one of the favorite things that he's going to be watching out for, his favorite word is going to be diversification. Diversification as far as source of fuel is concerned, but diversification also in terms of energy bets. And I'll ask you this now with the Trump administration making it clear that people need to start to import more from the US. What is it going to mean in terms of India's import mix? And with the rupee depreciating, what do you anticipate the import bill is likely to be impacted by?
First and foremost, the diversification of sources of supply is something that we had embarked on already. I've been associated with this ministry for 3.5 years. One of the statistics I've been throwing around is, we used to import from 27 countries. We import from 39 now. Lately, I saw one of our companies, BPCL, adding 1 or 2 other countries. So it should be 30. I think they imported a consignment from Argentina, if I remember. And there's also talk of 1 or 2 Angola also. So that diversification is going on. But Shireen, that diversification provides you at best satisfaction in terms of geographical spread. Your primary sources of supply essentially for the 5.5 million barrels that you import are the traditional suppliers in the Middle East. To that you've added Russia.
Yeah.
I see some of that changes because the United States has become a major supplier. Now, we are today, I think if you look at the 2 previous financial years, I think it was $19 billion and $20 billion. So if you were to ask me a question, and let me anticipate you're asking that question, can I import, I meaning India, import from the United States more? My answer would be an unambiguous yes. But again, all our imports are based on some fundamental, self-evident truths. We will import from wherever we can if the price is right. We never imported anything from Russia. I think in February 2022, our imports were only 0.2%. Yeah. Today, it's gone up. Russia, Iraq went up and down in the last few years. Who was the major supplier? Today, I see the United States, if they are gas from the United States, by the way, in any case is very profitable. Yeah. I think it's about $2 cheaper also if I'm going by rough comparison. So we are importing $20 billion of energy from the United States. Can we import more? Answer is yes, we can. We probably will. I don't know. These are decisions which have to be taken. Can we source more from elsewhere? Again, my feeling is yes. I have said so on many occasions, not so often on record in the public domain, but in my discussions with my bilateral colleagues, I've very often told them, look, you've got a major find, like Guyana. Now, obviously, somebody's marketing that oil for you. But please remember, the way the world is changing, I can anticipate things for, let's say, we were there in 2023, 24, for another 5 to 10 years. But what happens if, Shireen, suddenly a lot of oil comes available, then it becomes more decidedly a buyer's market.
Yeah.
I'm not saying that the seller, of course, if the seller is not there, buyer kya karega? But the point is, if a large economy like China is reaching a point of satiation, I should use the word saturation, but I think they're satiated. Because they have their own, their vehicular traffic is moving to EV, but that EV is tied to thermal.
Yeah.
So how much more oil can you sell? So I see in the coming months, the newly elected president will want to sell more energy to Europe. I already see talk of that. We will have bilateral discussion. I don't know when this will figure prominently because the new administration is settling down. But I know the economic operators on both sides are already talking about it. We've had people in Texas, Houston, Texas, and others coming to us for many years now, saying that we want more offtake agreements, we want this, we want that. All that is clearly discernible in terms of the shape of things to come.
Well, as you rightly pointed out, I would imagine that these are going to be conversations that take place. And of course, the expectation is that Prime Minister Modi will be in the US at some point during the month of February. Of course, we don't have a final date yet, and perhaps this will be part of the conversations, including what was discussed between the two leaders last night in the phone conversation that took place between President Trump and Prime Minister Modi. But let's talk about the priorities that are in your control, sir. And this is something that we've spoken about many times in the past, and I believe you've been able to achieve that blending target, or close to the blending target that you'd set out for yourself, almost now at 20%?
You know, we are always a month late. So we are today on the 25th of, 28th of January. The figure we have is of December. No, we don't. We have November. And I think that figure have we got the December figure? Not yet.
19%.
90%. So 19.9%, 19% is there. Now, if you have a target of 20% by the end of the ethanol blending year, which is October, and you are already in January talking about it based on previous figures, you don't need to have any knowledge of, rocket science or anything to know that you've already reached the 20% figure.